Hello and welcome to another episode of Business Explorer on December 30th, 2020. Let's go right into it. If you like this video, be sure to like, comment, share, and subscribe. So the first article that we're going to go through is from Fox Business. Dow S&P 500 hit records as oil pops and stimulus checks go out. U.S. equity markets rose Wednesday after Treasury Secretary Steven Mnuchin said direct payments to Americans would begin immediately, and as UK regulators approved a second COVID-19 vaccine for emergency use. The Dow Jones Industrial Average was higher by more than 115 points or 0.38%, while the S&P 500 and the Nasdaq Composite advanced 0.24% and 0.35% respectively. The gains have all three of the major averages contending with record highs. A bigger than expected drop in oil inventories, over 6 million barrels, giving crude prices a boost along with energy stocks, which were the top performers within the S&P 500's large sectors. On the COVID-19 relief front, Mnuchin said the $600 direct payments to most Americans as part of the $900 billion COVID-19 aid package would be delivered by a direct deposit beginning on Tuesday, and that checks would be arriving in the mail as early as this week. Looking at stocks, the AstraZeneca University of Oxford COVID-19 vaccine received emergency use authorization from the UK's health regulator, making it the second vaccination to garner approval from the agency. The vaccine, which has faced questions over discrepancies in clinical trial results, will begin being distributed on Monday. Elsewhere, Regeneron Pharmaceuticals, Inc. said a trial found its therapy drug effective and that the study would continue. Meanwhile, Intel Corp shares were in focus for a second day after activist investor Don Loeb's hedge fund, Third Point, called on the chipmaker to split its chip manufacturing operations from its chip design and development business. Fox Corp, the parent company of Fox Business and Fox News, that was weird. Fox Corp, the parent company of Fox Business and Fox News, averaged 1.9 million views per day and 3.6 million viewers in prime time, both records. According to Nielsen data released Tuesday, it was the fifth straight year that Fox beat out all other news and basic cable channels. In another analyst call, clothing and accessory designer Tapestry Inc. received a price target increase to $35 from $27 at Guggenheim. In commodities, West Texas Intermediate crude oil rose $3.06 to $48.40 a barrel, and gold was up $10.50 at $1,891 per ounce. In economic news, manufacturing in the Midwest showed continued improvement, rising to 59.5 in December, according to the Chicago PMI. A reading over 50 signals expansion. European markets were little changed, with the Euro Stoxx 50 down 0.33%. In Asia, Hong Kong Seng rallied 2.18%, and China's Shanghai Composite Index climbed 1.05%. Japan's Nikkei lagged, falling 0.45%. So yeah, it looks like as COVID relief starts hitting the population, this is going to positively affect our markets. The only thing I think, and this is my opinion, the only thing I think will hamper the growth in our stock markets is if taxes go up or some other idiotic policy gets put forth through the oncoming administration, but we'll see how that plays out. The only other thing that could hit us is I was talking with a doctor, and they said they're worried about this new strain of swine flu because it's only a few mutations away from being able to jump to humans, and that it'll make COVID look like a picnic. So hopefully that doesn't happen, but we'll see. So let's go on to the next one. These three surprises could propel U.S. stocks higher in 2021 and break the 3-year curse, DataTrex says. U.S. stocks could propel higher in 2021 on 3 upside surprises and break the 3-year curse, DataTrex said in a note on Wednesday. According to DataTrex co-founders Nicholas Colas and Jessica Rabe, the curse refers to the stock market's general inability to post 3 consecutive years of returns greater than 10%. Since 1928, The market has only posted 3 years or more of consecutive 10% or greater returns 5 times. During World War II, the Korean War, the start of the Vietnam War, the late 90s bull market, and the aftermath of the financial crisis in 2012, Datatrek said. Following a 31% gain in 2019 and a likely 15% gain in 2020, the S&P 500 will be staring down the curse in 2021. Ooh, sounds like fear-mongering. But there are 3 potential upside surprises that could propel U.S. stocks higher and help break the curse, according to the note. 1. S&P earnings could be more like $50 a share in Q3 and Q4 2020 rather than the $45 to $46 per share Wall Street currently has in its models. This is our base case surprise, something that is likely to happen but not yet fully incorporated into stock prices, Datatrek said. 2. U.S. vaccine rollout and adoption could be faster than expected, supporting the idea earnings might be better than expected since consumer confidence will recover more quickly, the note said. Number 3. Congress and the Biden administration might agree on multiple large fiscal stimulus packages over the course of 2021, taking the risk out of next year's earnings estimates, even if we don't get $50 a share in Q3 and Q4. Also, some of that cash would end up in equities, as 2020's $1,200 per person cash payments did, Datatrek said. According to Datatrek, the odds are currently not in favor of the market to break the curse, as Colas and Rib estimate that 80% of all the good news expected in 2021 is already incorporated in the current price of the S&P 500. If all we get is a sub 1.5% 10-year yield and a 2H earnings run rate of $90 a share, then the third-year curse will likely prevail, Datatrek concluded. So I think this goes back into what I was just saying. As long as no idiotic policies are put into place by the oncoming administration, the stock market should go up, but, well, I don't hold out much hope for that. I'm fearful that 2021 will see a rather significant pullback, which, if you're a good, smart, savvy investor, that means it's a buying opportunity because things will go on sale. It's like if you go to Macy's and you see a clearance sale, you don't just go, oh my God, Macy's is going out of business. You sit there and go, yeah, I get stuff cheaper. That should be the same thing if we have a pullback in 2021. If this curse does actually prove real or becomes a self-fulfilling prophecy, as it were, then it's just going to provide a buying opportunity for those of us who invest in the market. So either way, I think it's not something to go all Chicken Little, the sky is falling about. So let's go to this last one. Tesla stock gains. Caterpillar rises and the stock market is a little bit higher. Stocks set for a higher open as the U.S. heads into the penultimate trading day of the year. S&P 500 futures have risen 0.3%, while Dow Jones Industrial Average futures have advanced 0.2%, and NASDAQ Composite futures gained 0.3%. It's a quiet day pending home sales data are, well, pending. Yawn. There will be jawboning on stimulus checks, but chances for the amount to be raised to $2,000 from $600 look to be nil after Mitch McConnell wouldn't bring it to a vote. Yawn. AstraZeneca's COVID-19 vaccine was approved for use in the UK. Yawn. None of the news has changed or will change the story going into the end of the year. Even AstraZeneca stock hasn't got a massive lift. Its American depository receipts have gained 1.9% after its COVID-19 vaccine was approved by UK regulators. Regeneron Pharmaceuticals, meanwhile, has ticked up just 0.3% after releasing initial data on its COVID-19 antibody cocktail. Vornado Realty Trust has risen 1.1% after getting upgraded to buy from hold at Argus. Caterpillar has advanced 0.9% after Baird named it a top idea for 2021 and boosted its price target to $220 from $206. Tesla was up 1.1%. Tesla was up 1% after Wedbush and Credit Suisse both predicted that the company would deliver more than 180,000 cars during the fourth quarter and surpass 500,000 in 2020. And that sounds like it. That was a pretty brief article. So, yeah, the stock market not going up as much as the people would think with the vaccine rolling out. That's kind of interesting. You'd think as the vaccine gets rolled out more and more that we'd start to see a surge in the market. But I think that surge in the market is going to largely be dependent upon the country opening back up for business. We can't stay locked down forever. So I think as this vaccine gets rolled out, it's time to open up the country for business and get back to some semblance of normalcy. I mean, some people think that normal is never going to come back and that we're in a new normal. And I just don't buy that. People get pretty impatient and start expressing their frustrations in very public, very destructive ways. And then eventually the powers that be have to either concede or become authoritarian. And Americans don't really cooperate with authoritarians in any shape they take. So anyway, this has been another episode of the Business Explorer. I hope you enjoyed this. Please like, share, comment, and subscribe. And I am going to try and keep doing these a little more consistently. It got busy over the holidays, so this is the first chance I'd had to do a new one. So I hope you guys are liking this, and we'll see you on the next one.